in focus. But what about the way forward for the markets? We have Manav Chopra joining us from Nuvama Institutional Equities to talk to us about the market setup. And the first question to you, Manav, is about the broader markets itself, right? In the month of March, there was suddenly that fear on account of the commentary that we had gone from the regulators, whether it was SEBI or AMFI, and there was this entire, narrative that was being built up about the froth in the broader markets. Has completely got undone now, because from March lows, the small cap index is up already, what, almost 10 to 12%, and even mid cap index. What do you think is the way forward for them?
Yes, I think one thing to note is that the decline that we witnessed from the month of Feb and March was more or less corrective in nature, and this is the beauty of the bull market, where the corrections are very sharp, and the markets always need an excuse to decline. I mean, this is definitely in the hindsight, but when we're looking at the broader perspective, the markets have actually not violated any of the medium term or long term supports to call it as a trend reversal. So in fact, the markets have taken support at some important trend line levels, and also some important zones where it has actually rebounded from the oversold levels. Usually, markets doesn't remain oversold for a longer period of time in an ongoing bull market. I think that is the classical case that we have witnessed recently in the mid caps and the small caps. In fact, the point to note is that the kind of the reversals that we witness from these broader spaces, a lot of stocks, the frontline names have not only seen a good rebound rally, but a few sectors within the mid and the small caps have also extended its gains and have reached to its all-time high. So what we understand is that the price correction is definitely over, and what we are witnessing is a bull market going forward. There could be certain pockets which could eventually see some bit of a base building, but largely I think the bull markets is definitely there. And for the mid caps and the small caps, we are witnessing a good amount of pockets which are witnessing some fresh legs of breakouts with volumes, and there has been some sustainable moves over the period of time. So we remain quite bullish into the markets for the near term. In fact, the Nifty 500 today has also formed a new all-time high. So I think looking at the current evidence, the bull market is here to stay, and eventually on the upside, we expect the mid cap 100 to rally towards the levels of sub 58,000 levels, and for the small caps, we have a targets of close to 18,000 levels.
So the bull market is currently on and underway, as strong as it was earlier, if not stronger. But I'll come back to the pockets of breakouts that you talked about in the small and the mid cap space. But I wanted to shift focus to the large caps as well, because FY24, there was a 60 to 70% return that the small cap index generated. While of course Nifty wasn't too bad itself, it was almost 27 to 30%. But what about the next 12 months per se? Do you think it's realistic to still expect a double-digit growth across a double-digit return that is across these indices, or do you think it should be a lot more tempered this year in terms of return expectations?
Yes, I mean, we haven't seen that kind of a strong comparison between the large caps versus the mid caps, but there are certain pockets in the large caps which are witnessing a good amount of structured upleg, which is likely to be seen. I think out of which the biggest heavyweight is your bank nifty. I think looking at the bank nifty structure, the way the bank nifty has formed very, very strong support around the levels of 46,000, 46,500, and we've seen some big laggards within the banks like HDFC Bank or Kotak, where they have witnessed a good amount of subtle accumulation. My sense is the bank nifty is the index which could take the first leg for the markets higher, and we've witnessed recently how the banks have been providing that support for the markets, and it did not let it break the important support of 21,700. My immediate expectation for the markets could be, the bank nifty is definitely headed towards its previous all-time highs. In fact, the financial index has already breached its March highs, and so the bank nifty is coming very close to the levels of 48,400, which is its important peak, and eventually I expect those levels to see breaking on the upside, and eventually bank nifty heading towards 49,500. Having said that, so the trigger that we expect, the leadership from the frontline space would be coming from the banks, and looking into the IT, which is the next heavyweight. It has been forming early signals of basing out formation around the sub levels of 34,000. There might be near-term underperformance, but basing out of IT around this level of 34,000 would definitely be quite a positive for the markets in general, because we don't see much of a downside coming in, and eventually any break above 35,500 would bring in some short-term breakouts and eventually for the near term. So we expect Nifty to be to see a move towards 24,000 levels. I think that could be possible in next 3 to 4 months.
Nifty headed towards 24,000 over the course of next 2 to 3 months itself. The Bank Nifty heading towards 49 to 50,000, and of course the base formation for the IT sector is also something which is auguring well. You talked about those frontline index, but let me get into stock specific discussion as well, because I was just going through your notes and some of the interesting names that catch my attention include names like Karur Vysya Bank, because that stock has already been doing quite well. Even BSE for that matter, it's become what, 3x already in the last 18 months. You're expecting further growth there, and ditto can be said for data patterns. What makes you positive on some of these names?
I think it's important to note that the kind of market decline that we witnessed in the Feb March, none of these names witnessed any sort of a distributive patterns. Majority of the stocks have witnessed only very subdued decline with very less volumes, and importantly, these were the first names where we saw very strong volume setups, and majority of the sectors has been quite positive. If I take a note of BSE, this is one of the front lines of the small cap index, and as the small cap index, BSE was the first name which actually started to form a series of minor higher lows when the small cap index was actually declining. So these were some very early indications that we got within the setups, which had a very strong at least the strong setup that we were looking at. So basis on this, we do expect, largely, at least for the near term, BSE still has a reasonable upside going forward. And when we're looking at the chart patterns of data patterns, largely we did witness a strong breakout in the month of Jan, and eventually the stock retraced, and then eventually it has been forming a strong base with subtle accumulation formation. I think largely majority of these names have a good leg up of at least 30% from the current levels. But one sector which is really looking very good, which could have more structured up legs, would be coming from the metals. When we are looking at the metals sector for a medium term perspective, we don't see much of upside in the dollar index. The aluminum charts are bottoming out. Also, the copper is showing some early signals of breakout. So in this case, I think one of the strong alphas that we expect could be made from the metal index in general. And the metal index has also witnessed a strong breakout in last few sessions, and the leadership has been maintained from the front line, and the mid caps are also breaking out. So we really like SAIL as a selection from the mid cap space. And my base case for SAIL could, where we're expecting a good amount of upside, because the structural breakout on the monthly charts are also planning out very well.
SAIL is one of the top recommendations coming in, and Metals Pack has seen a big breakout, and you're expecting that to continue. But apart from SAIL, Manav, quickly, is there any other top bet that you would want to recommend as well, a high conviction buy? Because you talked about how rest of the stocks are also likely to see 30% upside.
Yes. So beside the metals, I think the other pack that we really like is going to be the mid-tier PSU banks. Within the mid-tier PSU banks, we have seen largely how the PSU banks have been in a very strong bull market in last few years, and mainly in last 6 months, the PSU banks have actually taken the leadership ahead of the private banks. I think the next space where we would be seeing a very strong, a good amount of volumes in terms of accumulation that we've seen, and the breakout that we witnessed, I think that is very much due coming into the mid-tier PSU bank. So Karur Vysya is definitely one of the shortlists that we like within that name. And also from the power space, I think JSW Energy is also very well positioned. We have been tracking this since quite closely, and we've been recommending this aggressively to our clients. But if you look at the broader perspective of how the power space is looking at, I think in general, the BSE Power Index have also seen a very strong outperformance in this kind of market volatility. I think in general, the sectors that we really like is going to be the metals, the defense, power, and the mid-tier PSU banks. And that's how we've selected the stocks within this space.
Thanks so much for joining us with that entire list of what you expect for the index, sectors, and stock-specific action as well. Manav, appreciate your time today. But on to an ET Now exclusive, and this one is a big one. We learned from reliable sources that